The following is a presentation of TFNN. Live at TFNN, the Money Masters. Now, your Money Masters, Tom O'Brien and Steve Rhodes.
Welcome to the Money Masters Show, folks. I'm your host, Steve Rhodes. Right now, we've got the Dow up 3 points, S&P up 40 cents, Composite up less than $1, 99 cents to be exact. Small caps up 60 cents, so no movement in the markets out here this morning yet. Microsoft up 10 ticks, Intel off 5, Google's up a little over 1%, up $9, but Apple off a little over 1%, down about $6. Popping to the upside here, you've got Boston Beer up $15.75. That is breaking out, and it just has got higher prices ahead for it. It's up about 14% this morning. You've got Best Buy out on rumors, some rumors out there. It's up 17% out there. We'll take a look at the Best Buy stock chart, see what it shows. It's up $2 and change. Tractor Supply, TSCO, that's up about 2.5%, up $2 and change out here. Perigo, PRGO, up about $1.74. CBS up $1.75. Netflix up $1.66. We'll take a look at Netflix as well. That was running into some resistance yesterday. Want to see where that stock chart actually closed. Apple leading things to the downside off $5 and change. Right behind it, Priceline.com. PCLN off $4.50. You've got Harbinger. They are down about 25%. Regal Pharmaceuticals down 31%, and Harbinger down 25%. So we'll take a look at those two stock charts. Our call number, as always, 877-927-6648. But first, let's go to the indexes, take a look at what we have going on out here. We'll start off with the Russell 2000. Just simply because that's the first one that was on my screen. If you are watching us on Tiger TV, that's what you're looking at is the Russell 2000 index. If you're listening to us on TFNN.mobi, maybe you're listening on a radio station, thanks so much for doing that. The archive of this show is on Channel 10, or if you go to the homepage at TFNN.com and you go over to the right-hand side, you'll see an iPad, you'll see an iPhone, you'll see an Android device out there. If you click on that, you can actually watch it live. The show is streaming live on the device right now out there. As we take a look at the Russell 2000, what it did yesterday, had a key reversal day yesterday. That means that, well, first what it also did was it moved up into the gap down area. That was the candle. That was the session of October 18th. That low was 837.12 out there. Yesterday it gets up to a high of 837.29, gets up over that, and it closes the window. However, it still remains a resistance line out there, tested here now once. Closed back below, just slightly below the trend line. That trend line going back to the October 4th lows out there. It is a outside day. It's a reversal candle. It's where the highs and lows exceeded the prior session. It comes after an extended condition out there and then closes back in the opposite direction of the trend out there. So the Russell 2000 giving you a piece of information most certainly out there. Right now, what the Russell 2000 does have, it has a couple areas of support, some tested areas of support. The biggest area being right down here. We'll draw that. That is the gap up here from November 29th. So it's got its work cut out for itself on the way down, but these are areas that you're going to want to be paying attention to. The gap up on November 29th, the low of that was 817.95, was tested 1, 2, 3 times here, meaning December 6th, December the 5th, and December the 4th out there. That's going to be a strong area of support. Breaks that, it'll be giving you a great piece of information. Of course, right below it is the next support line, which is the actual November 28th high out there at 813.56. But first, it's got to break through the first gap out here, which is the gap left here from December 10th to December 11th. That is on the Russell 2000. Let's go see what comes up next here. Let's pull up the Dow Jones, the INDU, and you're taking a look at it on my screen. What we can see about the Dow here, the Dow has gone up now and has done its work. It tested the trend line, trying to get back inside it. Yesterday, forming a doji candle with a long upper shadow. That tells you that the bears were in control of the session yesterday as the doji worked its way up into both the diagonal resistance level. That's that trend line coming off of the lows in October that you're looking at, that black diagonal line. That's the trend line, as well as what is even more important, quite frankly, is horizontal resistance, and that's a resistance area set up by this horizontal dark black line. That's really at the, and that's been tested several times now. That's the high of November 6th. That's 13,290 and a little bit of change. The high of 11 of November the 2nd out there. The high of November 1st, and then tested here most recently on December the 11th. That is on Tuesday. Tested yesterday, Wednesday, giving you really the most bearish of all the signals since it has been up at this level here. We'll see what it wants to do. Not really much movement so far today. It's up by 12 bucks and change, so no great shakes out there. In fact, we'll go take a look at the number one weighting inside the Dow to see what that is doing, and that would be IBM. What this sets up here, sets up a retracement level. If the Dow does start to retrace, I'd look for it to move into the December 5th level, right around 12,923 as its first stop on the way down. Let's go take a look at a couple other indexes. Let's go look at the S&P 500. Let's pull up the S&P 500, see what this did here yesterday. This also moving into a resistance, horizontal resistance out here. Let's put that on the screen so that you can see it. Now, that was really just, that's been tested now over the last couple of trading sessions here. What I'm taking a look at is the resistance line, really you could say set up by the downdraft day of October 23rd. In fact, I'll just pull this line back here because that's really what has set it up out there. And so you can see that area has acted as resistance. The market tried to move up into it November 2nd. It gave it up, tried to do that on November 6th, gave it up, tried to do it on the 11th on Tuesday, and then it also tried to do it yesterday as well. Yesterday also creating a, it's close to a shooting star, not exactly a shooting star, but close enough, and that is at an area of resistance. You can call it a doji. It has a lot of meaning out there. That long upper shadow there, that is on the S&P 500. So everything everything really coming together here as we move into this new moon that came in this morning at about 3 something. I think it was around 3:43 a.m. just to be exact. If we take a look at the NDX, we'll take a look at the NDX as well as the New York Stock Exchange, and then we'll go take a look at the SOX as well, see if that gave us any signals. As we take a look at the NDX, yesterday also getting up into the resistance level of where it last broke down. That's the high of November 6th out there. So that area is held as resistance, the high being 26.96 or so. A little bit of change out there. You can see here yesterday selling off most of the day out there. Of course, being led by Apple. Apple happens to be down a little over 1% right now, $5.70. Let's go take a look at the New York Stock Exchange, see what she is telling us, if anything. So as we take a look at the New York Stock Exchange, let's erase some of the patterns that are out here. What the New York Stock Exchange is doing. Let's take a look at first. Take a look at what it didn't do this from a. I wanted to see it actually get up into the September 14th low at least, which is at 84.3792. I'll draw the line across the screen. You'll see it just missed it. What it did do, what the New York Stock Exchange did do, is it did tag the swing point high. And this is all that it really needed to do, which was the October 18th level out there. We'll make that a black line going across the screen. So it tests that swing point, rejects that swing point. You can see closes towards the bottom of its session out here. Now, the New York Stock Exchange really has been the strength in the overall markets out here. So it is the New York Stock Exchange as you want to be looking for your signals from whether or not the move to the upside is over or not. A lower close today, which would be really a lower close below 83.88, would go a long way to selling its story that the move to the upside is over. So 100% move of a move, coming back into its most recent swing point, so it may be ready for a timeout. As far as where the New York Stock Exchange would travel down into, it's got a little resistance area from an open window that was from the November 28th high. That level's 82.0844. That is your area of support if the New York Stock Exchange and the markets do decide to pull back from here. Let's go take a look at the SOX just to round out the index. Well, I guess we could round it out with the transports as well, but let's take a look at the SOX here, see what the SOX actually did here yesterday. SOX trading out at 389.48, and the SOX traveling into some horizontal resistance of where it broke down on September 24th. Let's go ahead and draw that line on the screen out here as well. I'm just going to move this line up and that would be right about right here. So that is what the SOX is traveling into. So far today, not having any bearish follow-through. Real bearish on this would be to see the SOX close below 383.62. That would set up a bearish signal out there. Right now, though, trading out at 389.47. Let's go take a look at the transports, see what the Dow Jones transports did yesterday as well. And as we take a look at that, the transports here at its session highs right now, 52.18.58, headed right into a area. Let's just pull this across here. Give me a moment to get this off the screen. Okay, so as we take a look at the transports, let me pull this over here. So you can see really traveling into an area of resistance as well. The last two trading sessions, as the transports got up to this level, what we can see is the bears stepped in intraday and at least towards the end of the session, pushing the transports down. So as the December 11th area got up to a high of 52.27.69, got this long upper shadow up here that says the bears started to take control at a resistance area. Most certainly had the same thing occur yesterday. Gets up to 52.24.96, and then again that closes at near the low of its session. Today rejecting that area. However, the trading session is still young out there. Again, our call number is 877-927-6648. Let's go take a look. Let's go take a look at natural gas here. Just simply the tab next to what we were looking at. Natural gas completing so far a 1-to-1, A to B equals CD down. Looks like the natural gas contract here wants to run to the bottom of the channel line out here. This is a nice rising price channel. Has worked really well out there. Did I tell you it worked really well? So you can see here, that would be setting up a very nice trade if you can get down there. The approximate price on that is probably right around $3.25 or so. That would also be a 1 to 1.272 A to B equals CD down. It has completed the 1-to-1, so it could reverse at any time, and the reversal would rear its head by showing us a bullish candle signal out there. But so far, none has arrived, and I like the idea of taking a look at the bottom of that rising price channel out there. Speaking of rising price channels, let's go, or rising trend lines because they don't have the price channel drawn in. Let's go take a look at James Bond. So as we take a look at the bonds here, the bonds breaking the rising trend line. It has not done that since this trend line here goes back to the March 16, 2012 time frame. So you're looking at about a 9-month trend line, that area being broken. This has now completed more than a 1-to-1, A to B equals CD down. So let's go take a look at those A to B equals CD opportunities. It's also completed more than 1 to 1.272. That says 1 to 1.618 is on the way. That price point would be 147.005. Right now we've got the Dow up 12, S&P's up 2. We'll be right back, folks.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. As we come back, we got the Dow up about 11 points right now. S&P's up 2. I have the Euro-US dollar daily currency pair chart up on my screen here right now. The Euro-US dollar moving back up into the, wants to test the highs once more. This is a area of resistance. We're taking a look at the high of about 131.252 out there. It's trading right now at 139.25. It is inside that swing point from December 5th. As long as it's there and hanging out, it may want to go test those highs. That'll put a little, or should put a little bit of energy in the markets. It's put a little bit of energy in gold and silver. They pulled back off of their lows at this point in time. You've got gold down $17 and silver off $1 right now. Silver off 3 percentage points. Also putting a little bit of energy and fuel into the DAX and the FTSE. They're off their session lows. Right now the DAX is only down 9 points and the FTSE off about 5. So that is what's going on in the currency market as it relates to the Euro King dollar. Only up about 5 pennies here right now. Not even 5 pennies out there. Yeah, I guess about 5 cents. And let's go take a look at some of these stocks here that are moving. Well, let's go take a look at IBM. I mentioned let's go take when it came to the Dow, let's go see what the number one stock inside the Dow is doing. So yesterday, the Dow getting up into an area of resistance. That is this window, this little downdraft, this little window that was created on November 6th. The low there, 194.68. That window is still open. We haven't gotten to close above it. That was tested here on, let's see, today's Thursday, on Tuesday, as IBM got up to the level of 194.80. It came in there 4.1 million shares, coming with 3.2. Went ahead and tried that again yesterday. Same volume, 4.2 million shares, but it created a bearish engulfing candle coming into a resistance area here this morning, also trading lower. So the number one stock inside the Dow says its work to the upside is done. What does that set up? Well, it sets up at least moving down into the swing point of December 5th out there. It doesn't have that far to go. That would be 186.94 to 189.46, and it's trading at 192.53 right now. If it can come into that area with more than 4 million shares, what IBM will do will move down into the November 15th swing point, and I suspect that's really where it's headed. That's the 184.78 to 187.20 level. That is on IBM. Let's go take a look at some of the more popular charts out there, let's look at Netflix. I did want to take a look at Netflix out here and see what that was doing. Why? Because it's trading up here again this morning. So Netflix breaking through a resistance area that certainly held out here for quite some time. So it was a tested resistance area. It is where the stock broke down. Now, when this broke down on April the 24th, 16 million shares to the downside. So it has not had the volume as it has gotten up over that downdraft. So it's inside this little gap out here. And what that really sets up now, it sets up that looks like Netflix wants to make a run for the bottom of the gap. That would be the April 23rd candle. That low is 101.79, trading at 92.60 right now. So just a few more bucks to head to. No great shakes out there. It looks like that's where Netflix is headed. Let's go take a look at Apple, see what Apple is doing out here. Of course, we know Apple is it's off of session lows here. So let's take a look at the Apple chart. Again, Apple coming down and testing that hammer candle, Stevie's hammer candle. This hammer candle, folks, you can tell if you want to know where the bulls are hanging out. It's right here, November 16th. They've got a battalion of bullets out there, and each time Apple gets down into that hammer candle, that's November 16th level, the high is 530, the low is 505.75. You can see now it has been tested 3 times and can't bust through it. Now, 45 million shares at that level. It was tested here on December 6th with 42 million shares, coming in a little bit too hot. Then tested again on December 10th with 22 million shares a few trading sessions ago. Closed inside there, but that really didn't, that just said, okay, maybe it will go down and it'll test the lows out here. But it didn't have the volume there to go down and test the bottom of Stevie's hammer candle. That area being tested again today. So far, 6.7 million shares in 1 hour of trading. So it does have some pretty good volume inside this, with it being a high volume low coming in there hot on the trading session of December the 6th and trading with inside that candle does say to me that the low wants to be tested. That is the 505.75 level out there. But that is where the bulls are. That's why you want to be paying attention to candlestick patterns. Now, here's the beauty of that hammer candle. I mean, an absolute beauty on this hammer candle. This is a big trade. If you talk about the yen being a big trade, well, here's a big trade for you. If Apple closes below the hammer, what's the expression? If you're long, you're what? If you're long, you're wrong out there. And that is a large A to B equals CD down. You're talking $700, 200 point A to B equals CD, 705 down to 505 out there. That's all you got to be paying attention to, folks, at 505.75. 877-927-6648. We'll be right back.
You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Flat market out there. Everybody on the New York Stock Exchange, every place else in New York was at a fantastic concert last night. That 12-12-12 concert out there, the Sandy relief hurricane victims. What a great show for sure. Now, I'm going to stay in the technology sector because I had a great conversation. I thought it was a great conversation with one of our fantastic, incredible, extraordinary programmers here at TFNN last night. And we're going to stick with Apple. And he was asking the question that many people have. They say, Apple's a $700 stock, a $600 stock right now, a $534 stock, and you go past their stores. If you're out doing any kind of holiday shopping out there, you're seeing those stores, probably the most crowded stores out there, have great earnings, and says, how can this stock really go back to $348 a share out there? Is that a question that maybe you might have, or somebody you might know have? And you're going to be at a lot of Christmas parties, so this subject might come up. Let me give you perhaps, I used to be a fundamental trader. Now what I found out was the most fundamental aspect of trading was taking a look at what was technically going on inside a stock chart and get rid of the news. Just take a look at what the traders are actually telling you. Well, let me pose this question to you, because Apple's got great value. It's going to be around, whether the stock is trading at $700 or whether it's priced at $350 a share. But let me ask you this question, very simple question. Do you think that Apple as a company it would be more valuable if Steve Jobs was alive? I don't want to, alive versus, he's passed away, obviously, which is a shame out there. But do you think Apple as a company would have more value if he were alive? And I think the answer is absolutely yes. Well, just so that you know, Steve Jobs passed away on October 5th of 2011. And what the stock was priced at during that time period, if you take a look at the swing point low on October 4th, it's 354, and the swing point high is 379. That's a black line and a red line going across my screen. Well, I don't know how this works, folks, but where Apple is actually headed to, it actually wants to make a 1 to 1.272 A to B equals CD down. $348. Yes, the 1-to-1, which would be a 200-point move, would take it down to 400.82. But it wants to make wants to make more than that, and it's going to take it all the way back down. So so Apple as a company, I think, was fairly valued when Steve Jobs was alive. That's where it was valued at. The A to B equals CD takes you down there, and I can't tell you how it works. I can just tell you it was fair valued then when he was alive. And maybe it got overvalued just simply because of the way that the market participants work. When you take a look at the way that they work, you had the markup phase, which is certainly what is going on now. You've got the markdown phase taking place. In any event, let's stay with technology, but let's go out to California to Carlos in Gardenville, California. Carlos, thanks for calling. Thanks for holding.
Good morning, Steve. How are you?
Doing great. Good to hear your voice again. Happy holidays to you.
Same to you. Thank you.
Thank you very much.
Steve, it's been long since we spoke. I've been working first shift, but I'm going to be working first shift for a while, so I'm still listening to you through the archives.
Oh, that's great. Now, are you taking the day off today?
Actually, I have a jury duty at around 9 in the morning.
Oh, okay, so, great.
Yeah.
Good. Thanks for providing service to our country by doing that. That's really great.
I'm glad to do that. Yes.
That is great.
It's a privilege, actually.
Yes, I agree. Absolutely. That's really cool. Very, very cool. Well, that's great. Glad that you're still listening in on the show, and hope that all's well with you and your family. You wanted to take a look at the TECS, which is the Direction Shares 3-time bearish move of the technology sector. So as long as we're talking about technology, tell us what you're doing and how we can help you.
Okay. I bought this several weeks ago.
Okay.
Actually, I'm in at 803.
Okay. Good for you.
And when it hit around $11,
yes.
I sold half of my position, but I still have half, and I have a stop place at 875.
Okay.
Practically, what I want to do is I want to let my stop take me out if it goes below that, but I want to let this go whatever it goes.
Yes.
Until I come back to the third shift, so I can manage it. Yeah.
That's great. That's great. Well, look, congratulations on the trade for sure. So that's nice. It was nice that as it was making its high November 16th, that you took some money off the table for sure. So that is really great. It's great even with the remaining part of your position that you've got a stop in place here. And the technology sector is absolutely a weak sector out there. Certainly I imagine that Apple is the lead weighting stock inside this. So it's really going to be all about Apple. And Apple at this stage, as we were taking a look at before we went to you, it's struggling. Now, it's got some resistance for sure, at that hammer candle. But what you want to see is that thing taken out with volume preferably. But, are you looking to add to your position at all?
Since I cannot manage it real time, what I'm trying to do is stay with my profits because cash is king, and I learned that from you guys. And at this level, putting my stop where it is, leaving my stop where it is. Actually,
you said your stop was you said your stop was at 875.
Yes. I'm trying. Well, I put it since I took profit, so it's actually pulling to the level where it's getting close.
Yeah. It is.
Yes.
No, go ahead. Go ahead.
Well, when I look at the charts in the daily, I saw some areas of congestion.
Yes.
And around April, the year 2012, and September, around the same levels. So it's $9 around where I see that support.
Yes.
So I want to place it just a little, 25 cents below that support, where it was, or actually it's there, and I don't want to move it. Because if the market takes me out, well, I'm out.
Yeah. No. Look, that's absolutely, look, that is the absolute best way to trade, is to manage your money. That's what you're doing. You don't have to be in front of a stock screen. All you have to do is really, all day long. All you have to do is set it and forget it. And so when you've got your exits, and I always recommend that you have both your exit to the upside if you're in a long position, as well as your stop protection on the downside. And because you can always get back into a position, as you know. And it's when you're the most objective. And so I think not actually watching the screens all day long helps you, because you put together a trading plan. And that's what you're talking about. And that, Carlos, is the biggest Christmas present that you could give to every single listener out there. If they just simply used you as an example and just simply, had the stop in place. If the market takes you out, so be it, no problem. As well as take some money off the table when it reaches one of your first price objectives. What was nice about this trade here, as it was moving into that $11 area, it was also moving into a congestion area. It was also moving into a swing point from July 25th, 2012. So it was making that 100% move of a move. It was coming down into, a downdraft that it had if you were just trading off of this stock chart from June 6th. So it did all the things that it was supposed to do, but most importantly, you did all that you were supposed to do. And that's a great example to everybody listening out there.
Thank you so much. And now, can I ask you for 2 favors?
Yeah, you can ask me for 3.
Well, actually, I have one. Please say Tom hi for me.
I will.
And the second one is, when you do your market reading, can you always include the XLF? Because for me, it's a very important gauge. And
absolutely.
I want to know, I'm using that to manage a trade I have.
Okay.
And it really helps me, because the only way I can keep track of the market right now is through you guys, because at break time and lunch time, I go through my phone, I get Tiger TV, and I go through the archives, and it's actually a big help.
Well, that's great.
It's amazing. When I was working third shift, it was a lot easier, because I was at home.
Yes. But
now, without you guys, I'll be lost.
Well, we say without you, we would be lost out there. So, it's just simply absolutely fantastic. And yes, and specifically here, I will tell Tom hi. He's out there. He's Go Long America, and he's out there buying real estate this morning. So that is a beautiful thing. He's putting people to work. So not only he's putting money to work, and he's also putting people to work, and fixing up and repairing the homes and condos and so forth that he's buying out there. Now, the XLF is the strongest sector inside the S&P 500 right now. Not strongest from a long-term standpoint, but with regard to, its most over the course of the last several months out here, it has been the strongest. Now, what it did, and this is going to be a pretty good indication for what the markets are going to do, the XLF yesterday went ahead and completed a 1-to-1 A to B equals CD, and it did it with a doji candle. And that is more important, because it was also coming into, it was testing the swing point from October 18th out there that had 51 million shares. As it came in yesterday, it did it with 55 million shares. So from a volume standpoint, it says, okay, with it being the strongest sector and coming in with similar volume, maybe it still wants to hang out there and go up. But what it was also doing, and more importantly, was coming back against that high volume high from September 14th with 122 million shares. So it had less than half the volume. Today, what you want to be taking a look at, Carlos, if this thing closes below 1614, and I don't mean like 1613 or 1612, but, closes below that, what it says in Japanese candlestick charting says it's like autumn time, and the leaves would be falling off of the trees. You guys don't have autumn in California, but around the country they do. And when leaves fall off of the trees, it's usually more than one leaf that falls off of a tree. But so far, it hasn't given you a reversal signal. And are you using the XLF? Are you in a trade to short the financials, or?
Yes.
Okay.
Yes. I'm waiting, but I want to see more. As always, I do a very small position with financials. And
Sure. So I love the idea that what you are short is the technology sector, because that has been the weakest sector out there and still has a lot of weakness left in it. So I like that. Whereas the financial sector has been the strong sector. So I would, and it's not that there aren't some possible short trades out here. But while the market here is just simply trading from a pattern standpoint, I'd be looking at, when you decide to go long the markets for any trade, right now I'd be looking at the XLF as being where you want to be long, and I would be looking at the technology sector where you want to be short. So that's it. So I just throw that out there for you.
Yes, I'll be long at 850. 825.
Okay, all right.
Yeah, S&P.
Okay, we're gonna save that comment. Hey, great to hear your voice. Happy holidays to you and your family, and be well.
Same for you guys.
You bet. You bet.
Merry Christmas.
Thank you.
Bye.
That is great. It's always so great, folks, to hear from our listeners out there. And there is nothing better than impacting people's lives, and that's what Carlos did for us. He's impacting my life. He's impacting your life as well. Here is somebody that just gave probably the best Christmas gift, Hanukkah gift, any gift that you possibly want out there with regard to trading. He's got his stop in place. He can set it. He can forget it. That's just like using the Nadex trading platform out there. So you want to make sure that when you do set up a trade, and, inside my newsletter service, whenever I set out a trade, we have both the stop, we've got the entry, and we've got our exit points, and we just simply manage our stops along the way out there and let the market take us out, because you can't control the markets. You can only control what you can control, and that's your stops, your exits, and, on both sides of the trade out there. So congratulations, Carlos, on those moves. As we come back here, take a look at the markets right now. The Dow is off about 10 points. The S&P is down about 27 pennies. So there were a couple stocks out here that I wanted to take a look at that were really struggling, just to see what they're trading down to, look for some lessons out here. Regal Pharmaceuticals is one of them. So let's go take a look at that stock chart. That's down like 25 or 30%. Let's go see what that is trading into. Most likely a volume area, right? So we got RIGL is the ticker symbol, trading down at 574. Of course, probably I spoke too soon, and maybe this is making all-time lows out here. Oh, look at this thing. So this is coming back all the way into an area where it really broke out. Let's put this on a longer-term chart out here, maybe to get a better picture. So you've got this stock is trading all the way back into its lows. Man, talk about volume off the top. Here's a let me refresh my screen, make sure I've got everything. So here's a whacked-out chart for sure. Look at this thing. How about this, folks? Got to love it. Back in 2000, January 31st, 2001, the high of this stock was $90. Trading at $572 right now. Now, not a lot of volume out there for sure, but what a wacky-looking stock chart this is. Right now, it's just trading back towards its swing point lows, which are March of 2009, and that price is $4.19 right now. That is where it is headed. Let's go take a look at the other stock chart here, which was Harbinger Group. HRG is the ticker symbol. So as we take a look at HRG, that is down about 26% here this morning. I guess I have to type and actually put it in there, HRG. So that is trading at $7.58. That certainly fell out of bed here, and with volume pulling back into the area where it last really broke out or had any sign of strength, which is the trading session of June 22nd. That low was 702. The high was 771. Trading inside that right now. That volume there was 4.3 million shares. On the way down, folks, already today, 4.8 million shares. This actually wants to break through there, probably get all the way back to $4.50. 877-927-6648. Dow's off 11. S&P's flat. We'll be right back, folks.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, and it is Thursday. Our lineup today, we go up to Basil Chapman, up to Newton, Mass. After this show. Larry Pesavento from 12 to 1. And just make sure you're sending Larry all of your white light. He's still recovering from his flu/cold out there, having been through it. It lasts for a couple weeks, and it just totally drains you. So just send him some energy. Then we've got Daryl Martin from 1 to 2, David White 2 to 3, Ken Shreve 3 to 4, and the Tom O'Brien Show from 4 to 6. And also, folks, don't forget about our Tiger Dollar promotion out there. The best way to really put your money to work is to, and for yourself is obviously to always continue with your education. So many great educational services here. My newsletter service, Mastering Probability, that's an education-based newsletter packed with education out there. You've got Basil, who's up next. He's got a special promotion going on that you can get his CD, the Chapman Wave, out there. Plus included a month of his newsletter subscription. So that's another great thing. The Tiger Dollar promotion, where you get a 25% bonus. That's first on with regard to Tiger Dollars. Then you get another 5 or 10% bonus, depending on how much you invest in yourself, invest in Tiger Dollars out there. All the details on the homepage at TFNN.com. The special runs out December 19th, and today is, December the 13th out there. So don't procrastinate. Go out there and do that ASAP. As we come back here in these markets, we're going to take a look at the energy sector, the XLE. The energy sector, you're taking a look at a descending tops trend line. The energy sector trading into that area right now. That goes back up to the highs out here from September the 14th. You did see the energy sector move up above it yesterday. Had a really, that's a bearish-looking candle, even though it did move higher yesterday. Bearish in the standpoint that it went back to a previous area of resistance. This is now the second test of that. That is the October 22nd low, 72.72 out there. It was in the volume on that candle is 10 million shares, almost 11 million shares, and the gap down has 15. So really 15 is your benchmark. As it moved up into this area and tested it, it did on November 6th with 10 million shares. Not enough volume, went ahead and moved down. Yesterday went up there with 9 million shares, so even lighter volume as it got up into that area. Today you're getting some follow-through to the downside here. So the energy sector, which is the second or third weighting inside the S&P 500, giving you a little signal here that maybe its work to the upside is done. It looks like a consolidation pattern because it does have some support down at the open gap here from November 19th. That low is $70.62. So your trade is somewhere between the high of yesterday, which would be 72.82 right now, all the way down to the low. I'd say I'd go ahead and use the low of 69.43, the November 28th out there. That is on XLE. We got maybe just a minute or two. Go take a look at a couple stocks here, Popping AutoZone and Chipotle. Two stocks that we used to look at fairly often out here. AutoZone, AZO is the ticker symbol. Let's go see what this is doing. Doesn't look like much behind this move. This move here on AutoZone, really just coming into its most recent downdraft. This is a stock here that is certainly struggling. O'Reilly Automotive yesterday testing an area of resistance and rejecting that. ORLY is the ticker symbol there. We were looking at that yesterday, and I noticed that on my stock chart during the show here. O'Reilly Automotive getting into a tested area of resistance as well. That's the June 26th level. That low was 94.55 yesterday, definitely creating a shooting star candle and getting some additional follow-through. So the move, the pop on AutoZone, may not be real since these all work in tandem here. Stay tuned, folks, for Basil Chapman. Have a fantastic Thursday, folks. I look forward to seeing you tomorrow morning. Take care.